Unless you're a renter, you need to know about this. And Governor, please heads up. My client, who has been a homeowner for many years and has had no claims against her homeowner's insurance policy, has been getting denial after denial for a home she is trying to purchase because of the amount of claims that homeowner put through in the past 5 years on their home. Insurance companies are now going to look at the claim count that a seller or a homeowner has put through on their home and use that as a basis for what they are going to charge a new homeowner, the buyer, for their insurance policy. Then there should be something available to buyers at the very start of this process, meaning before they even put an offer in on a home, to know what the claim history is on that property. In my opinion, if people can go out and buy a used car and get Carfax to see a claim history on a car they're spending $5, $10, $30, $40, whatever $1,000 on, but they can't get a claim history on a property they're looking at spending hundreds of thousands, if not millions of dollars on. Cash buyers, you're not off the hook on this either. Cash buyers generally will do a clear title contingency. Clear title and insurance are two different things. So if you start to get to the closing and you're only within days to a week of closing, which is generally when people are getting insurance, and you find out where it's exponentially higher than you expected, you could lose your deposit if you walk away. I'm not a lawyer, but for a mortgage buyer to get their mortgage, they have to have insurance on the home. If they can't get insurance, they can't get the mortgage. So there is a thought process there that the mortgage contingency would kick in and protect their deposit. But still, is this something you want to find out within days of closing? And is it fair on a buyer to have to pay exponentially more on insurance than expected because this was not disclosed to them until the very end? Attorneys out there, should there be inclusion now for insurance as far as if the insurance is going to be outside of fair market value? Should there be some type of a contingency included when it comes to insurance with this now being the case?